everybody, welcome back to Exponential Finance, the podcast covering finance, technology and innovation, from our home in Japan and beyond. Romain Zanolo is the Managing Director APAC, Financial Institutions at IDEMIA, the global leader in augmented identity. IDEMIA provides a trusted environment enabling citizens and consumers alike to perform their daily critical activities in the physical as well as digital space. On top of his expertise in the payment industry, Romain has a strong experience in corporate financial advisory, including valuation, financial modeling, transaction support advisory and strategic consulting. He is also a fintech startup mentor at Plug and Play Tech Center in Singapore. And now, please welcome Romain Zanolo, Managing Director at IDEMIA.
Hello, Romain. Thanks very much for taking the time today. You've been in payments and also in Asia for quite a while. So let us start with the macro view. Asia, of course, is a very big beast, and there are very different markets in there. Maybe we'll start by you sharing a bit of how you view the market and how has that developed over the last 5 to 8 years.
Clearly, I think, and that's one of the key comments and statements, is that there's not one Asia when it comes to payment. There's actually not even one Southeast Asia. We have regulators that are different in every market. We have market dynamics that are extremely different, local players, local regulation, international players getting in. So that's, for me, the biggest so what of my time in Asia. We have to take every single market one by one in a way. And cross-border and going international is the biggest challenge for most of the company. In IDEMIA, we were in Asia for many years, so we are lucky to have a footprint in all the markets. But clearly, over the last 8 years, that's what I've seen as the biggest difficulties for people to scale or expand, is that there are some markets that are a very nice entry point to Asia. For example, Singapore is quite friendly in terms of regulation, so many people are starting in Singapore. But then the expansion is sometimes taking more time than anticipated.
And so with IDEMIA now, you have how many offices across Asia?
13. So we are present in almost every country in Asia.
The company itself has 13,000 employees, over 2 billion in revenue. So you're not a startup by any means. It's a well-established player in the sector.
IDEMIA is an MNC. We are present in many markets, and not only in Asia, everywhere in the world. I think we operate in almost 180 countries. Overall, IDEMIA stands for Augmented Identity, which is a concept in itself. It means that we basically are helping in this hyper-connected world to secure and give like a secure, trusted digital identity or physical identity to everyone, for consumers or citizens alike in their day-to-day life. So we help you in your life when you pay, when you connect, when you vote, and sometimes even when you access your office. And that's what you see in our organization as well, which is split into, I would say, 2 main verticals. So we do business with governments on one side, typically providing you a physical identity document, for example, a passport, a driving license. The digital version of it, even sometimes now. We also work with airports, for example, Changi Airport in Singapore, where we provide biometric system to Changi to facilitate the passenger flow and the immigration process. And on the other side, with enterprise. So we work with telcos, we work with SI company for access control, automotive as well, and of course the biggest part where I sit, which is a bank in the enterprise.
And so in a way, it's a reflection of the interconnectivity of all these sectors. I mean, from a company perspective, you've done a nice job in creating these 5 areas that you've just described, but in reality, there's quite a bit overlap in between these, right? And the technologies cross over. And so it's not quite as clear in reality as it looks on the website.
Oh, for sure, definitely. And I think it's in the way we work, we interact very frequently with our colleagues. Take access control, biometrics is how can you leverage those technology in the banking world. Mobile operators are becoming sometimes financial issuers now. So clearly there's some overlaps all the time in our businesses, definitely.
Let's dive into this augmented identity concept once more, because quite honestly, when I read this as a centerpiece on your homepage, it tripped me up a little bit, simply because when you play this game of like complete the sentence, if you start with augmented, identity is not typically what people would say next, right? There's other things. Reality comes to mind for those people who are a bit more tech savvy. What does this concept ultimately entail?
It means only you can be you. So our DNA is around encryption, security, biometrics. And we want to ensure that only you can be you, only you can access those critical services in your day-to-day life. So there's a point of accessing it, but at some point there's a point of keeping your identity, making it alive so that you can reuse it for different items or operation in your day-to-day life. And that's, I would say, this concept of augmented identity. If I take an example in banking, for example, and something that fix, we have one step, which is what we call eKYC, which is the account opening. So we help and support people in account opening by using our biometric technologies. But that's step one of the consumer journey. You open your account, we verify your identity, but you can also store those data, keep the biometrics aligned with the regulation, and reuse that across the consumer journey in your banking life and experience. I open my account, but then I can use the same identity that has been created to re-access my account, sign some transaction, potentially to get cash out of an ATM. There's a whole range of use case that can be built around that to reuse your identity once it has been proven and verified.
So since the company has been around quite a while, the whole product portfolio, which is truly impressive, also reflects the development of technology over, let's say, 2 decades or more. So if I look at EMV cards, which is a chip in the smart cards, that was developed in 94. Maybe it took like 10 years to actually roll out. And then especially the US needed another 10 years to get rid of the magnetic stripe and so on. So Asia, in a way, has been much advanced. But that already feels like old technology because you talked about biometrics. And so is the future that we're paying or we're authenticating payments with our biometrics, with our face. So you get the use case of getting onto the bus, right? You get your face screened and it gets automatically deducted from your wallet.
The reality, what history has shown us so far, is that payment means tends to add and not to disappear. Some countries are still using a mind-boggling amount of checks. I discovered that the other day recently, but it's still there. It's still quite a lot of volumes for checks. So what we see clearly is an addition of the payment means. When it comes to the physical card itself, it's a technology that has been around for a while, but one, it's a technology that keeps evolving with new security standards, also with new features that we bring to the market to help the issuers to differentiate. And the second, if you look around, and that's, I think, the most interesting part, you've got a lot of digital natives in Asia. They start with a QR, they've got a mobile wallet, they are the super app. But if you look at what they're doing, they're issuing a physical card now. Physical card is still the way to reach out to the mass, to increase your transaction size, to make it cross-border, and it's still a must, even for digital players. But the attention and the innovation they bring to the physical card is actually quite interesting. We've launched recently, for example, a cool card in Singapore with Razer. When you pay contactless with this Razer card, the logo of Razer is lighting up when you pay. And it actually fits perfectly with the brand Razer. It's a gamer brand for millennials and young people. Their entire brand is based around this, I would say, cool concept and their logo. And that's what we have in their card as well. And the feedback from the market was tremendous. I remember that day, it was, I think, in the top 5 of the Google search in Singapore when they announced and launched the card. It was all over Instagram. And that was pretty cool to see that for this EMV card. I think this switch from banking to lifestyle banking is also driving innovation in the physical card. To come back to your question, will we pay with biometrics? I think, yes, it will be added to payment in certain form. Experiments are going on all over the world. Some are actually more than experiment. It is now live and piece of technology. There's some mobile wallet that you can use with biometric to pay. But even in the card itself, we are adding actually a fingerprint sensor on the card, and the entire industry is preparing for the rollout of this next phase, which is to authenticate yourself. And again, this concept of only you can be using your card, which means that even if you travel, for example, the payment system will know that you've been the one using this card in this country at this point in time, and the transaction is authenticated using your biometry. So it's proof of life in a way, even on the physical card.
It's super timely because in Japan this week there have been some news that the foreign community didn't take that well, and the government has developed an application that validates that the foreign resident card that you have is a genuine one. Japan lost perfection, so there've been like 600 cases or so of fake cards last year, which in other countries would be a negligible number, but here it validates the authenticity of the card. And when I was reading this and also preparing for this conversation, I was thinking it's the wrong approach, right? Because it validates that the card is correct, but it doesn't validate that the person using the card is actually the owner of the card. So shouldn't you validate, as you say, the proof of you rather than proving that the card is actually authentic?
This is actually the whole concept originally behind this card. I think it evolves on multiple possible use cases now. The original idea was designed around financial inclusion in the beginning of this concept. And how do you distribute benefits? And when you're a government, you distribute benefits. How do you ensure that the person that is collecting the benefits and spending them is the right one? That this person is alive, that this person is authorized for this transaction. While I would say keeping the biometrics and respecting privacy, all your data are in your card. So there's no one that owns or store your data, basically. You have your data yourself in your card. So there's no like database or things like that. Everything is in your card. But at the same time, for the government, they can ensure that the benefits that are distributed are used by the legitimate person. So that's one of the key use cases of biometric cards, definitely.
You introduced this term of lifestyle banking. And again, I'm like grumpy old guy. I look at lots of these fintechs and they come out with a metal credit card. Same, credit cards have been around for such a long time. It doesn't really feel innovative. You gave it a good name, and so that sells. Clearly, also in your role, all these startups are a significant market now, at least in quantity, and some of them will grow to become really big clients. And so your company has a special program as well to enable fintech startups to bring your services on.
Definitely. And first, to your point on lifestyle banking, you probably like a few things in your private life. You have some personal interest. And what we see more and more, and typically companies like Razer Bank, they enable anyone to issue a card. They remove all the barriers to card issuance. And there's many companies doing that nowadays. That makes it extremely simple to issue a payment product or a payment card, focusing only on your go-to-market and your core business space. And what we see with that is that payment credentials are being issued more and more by people that were not traditionally a bank or would not normally go in that sectors. You can see that as co-branding 2.0. Before you were having your big bank with the name of a supermarket, and now anyone can issue their own cards and payment credentials. But what it means is that for you as a user, for you as a consumer, if you're into gaming and you like video games, maybe you're going to select Razer because you get your points to video games. If you're into cryptocurrency, you might get your card with a crypto exchange and use your cash back to trade. And I can continue like that. If you're into travel, you will get your big pay card, which allows you to get AirAsia miles, and so on and so on. So that's a trend that clearly we see, and that's driving out more payment product in the market, being it physical card, digital card, wearables. There's a huge appetite for those innovative solutions. And I think this is being acknowledged as well by the payment scheme like Visa and MasterCard. And Visa has put together a program that we are part of, which is the Visa Partner FinTech Connect, which basically simplify this journey for new issuers and which connect them with technology players or partners like us to go to market fast with the right set of technology and bring those innovation out to the market. And that's what we've been doing in the fintech space recently, enabling some of the cool names in the region like Razer.
If I decided today I want to start a fintech startup and I just focus on the basic functionality, I build a personal financial manager, right? I want card payments because I also get the interconnect fee, so it generates some revenue. One of the Nordic vendors, Tink, they have a PFM SDK. And any good software engineer can build a personal financial manager there in an afternoon, basically. So it really becomes a question of how attractive is the product, what's your target customer base. The technology is so commoditized in a way, you can take all these components, put it together like a Lego set, and you're there. So then it does become, again, lifestyle banking. It's like, does the brand fit into what you feel passionate about?
It's still a certain amount of work to integrate all those bricks, obviously. But overall, I think that the message is there is that by working with technology partners, such as the one that Visa is exposing to their programs, you're able to get access to all those blocks and bricks. If you want the payment card, the payment product, eKYC, personal finance, analytics, all those technology bricks are available for you, those type of new technology company, and you basically pick the one you want to build your product. And I would say your core mandate in that case would be focusing on your own go-to-market, the customer base or segment you want to target, and obviously the profitability of your business and how do you make money out of this. And I think that's one of the parts where we are playing a key role today. You were speaking about metal card. I think metal card is playing a key role in helping fintech in the path to profitability today. There are many articles out there on the profitability of digital banks. I've seen one in Hong Kong recently on the fact that the virtual banks will be profitable only in a few years. There has been a ton of studies on the UK-based virtual banks. And what you see is that when you've disrupted an existing profit pool or an existing market by cutting the fees, which are the original profit pool of the banks, you need to make money somehow. And there's not many ways to make money. Either you're in lifestyle and you have another business, and payment is customer acquisition, and you are basically using that to maintain your business. The second aspect, and that's what, for example, Revolut has done, you segment your card product by having different tiers and you charge for the tiers. So you create a premium product with a package that allows you to charge for a premium product. And the metal card fits really well in this premiumization trend that we see that allows you to charge and have a path to profitability in this high-end segment.
I wanted to ask a few more technical questions, maybe. One is around security. And in Europe, you've got the standard around strong customer authentication, SCA, which really works across three pillars. So something that you own, something you know, and something that you have to, right? I think that's a colloquial description. You've built something around that I found very clever, and you called it adaptable authentications. Maybe you can explain that for a moment.
Overall, I think that those three pillars are the baseline of security and authentication. And what we mean by adaptable is that you can combine those items to have 1-factor, 2-factor, or 3-factor authentication. I give an example on the biometric card. When you use a biometric card, for some use case we've developed now, you can tap your card on your mobile to trigger a reaction between the app and the card itself. So you tap the card on your mobile, you need to own the card as a second factor. So it's something you own. But at the same time, you need to put your finger on the biometric sensor, for example, of the card or the phone. So that's something you are. You already have 2-factor authentication. One is biometrics. The other one would be something you have. But in other contexts, it could be a password, for example, that you will combine with a biometrics, and you will have 2-factor. And sometimes we even see cases of 3-factor authentication where the three are together and giving you the highest level of security. And then it's always finding the perfect balance in security between user experience, speed of execution, and the level of security.
Do you think that across Asia, there's an equivalent standard to SCA in all markets, or the markets that are protected stronger than others?
Most of the regulators are looking at what they can do and how they can streamline those processes. I'm not aware of a single standard that applies in Asia, especially between North Asia, South Asia. We see different type of authentication, sometimes like authentication happening on the back end on the device. So that really depends on the market. And I think worldwide overall, it's still open on how do you do authentication in a way.
The other thing I find interesting that goes again across your nicely crafted business line, but is everything we talked about so far ultimately is human to human payment, right? It might be human to company. We can debate this, but it's like individuals doing a transaction. And where we're moving clearly towards is machine to machine payments and the economy. And that plays more into like the mobile communications and then IoT offerings that you have. And so how do you see that transition, basically, that we've got whatever micro devices and the silly example of your fridge ordering your next serving of orange juice from the shop and basically paying automatically?
Overall, those are things that exist already. A company like IDEMIA, when I was mentioning in the beginning, we work with telcos. We provide SIM card, for example, to telcos. But what is a SIM card? In fact, it's a secure element that is almost impossible to break, where you can store keys and you can store authentication means inside. This type of technology, the secure element, you can use it in IoT in the future. We're already doing it. We have some called eSIM platform, for example, where we can project credential over the air into a device. So it would be for your mobile operator, but you could imagine using this secure element to pay in the future.
Different markets also have different conventions. Simply in Korea and Japan, you have the choice. If you pay by credit card, most credit card companies allow you to defer payment and do this in 2 or 3 slices or so, which makes it a bit harder for the buy now, pay later vendors, BNPL. But that's certainly a huge thing in Europe, in Australia. And what are your offerings in that space?
From a business perspective, we're speaking about new issuers, new people coming to the market, issuing either new physical card or new digital cards, having needs for extra security, for account opening and things like that. So for us, it's obviously a market opportunity to work with the buy now, pay later, and we're working with some of them. When it comes to the regulation itself, the debate is still open, I understand, among the regulators. Is it prepaid? Is it credit? How do you treat buy now, pay later? At the end of the day, I think there's a consumer demand for that. The appetite is huge. The amount of subscribers to the new BNPL are there. So they are addressing a pain point in the market in a way. Otherwise, their success won't be at this level. I usually think that the regulators are following the market and will adapt to this need for the market. But overall, it's an interesting trend that has driven quite a lot of innovation in payments recently.
What else should I ask that's important to you?
One of the things we are quite proud of at IDEMIA right now, and the big trend we're seeing in payment, so not only with fintech, but with banks, is the transition to also meaningful banking above lifestyle banking. Banks are moving to sustainable finance, and this is something across the verticals of the bank. We're trying to help and support this bank with a set of solutions that we call Green Pay, which is allowing banks to reduce the carbon footprint and plastic footprint of the payment value chain. So it goes with different items, but typically we, for example, manufacture card in recycled PVC instead of standard PVC now, which allows to basically reduce the plastic footprint and the carbon footprint of your card itself. We have a set of solutions to avoid or prevent sending PIN, leaflets, all the papers that you would normally send with your cards, to remove this part as well, shall you choose to issue a physical card. And obviously, we're supporting the digital payment journey as well with our mobile payment solutions. All of that is something that is seeing a really big traction at the moment. We had some major banks that announced that they are moving all their cards to recycled PVC. And this is something that is seeing the biggest appetite in our industry at the moment.
Once the pandemic is over and we're allowed to travel again, which hopefully by the end of the year in Asia, we'll see some of these restrictions lifted. Where are you going to spend your time across Asia? What are the top markets for you to drive growth?
So actually, number one is Japan. Definitely, we are seeing a big demand in Japan. IDEMIA has been in Japan for a very long time, but a few years back, we had our first big success in payment, enabling JCB for their token platform. So the token platform or tokenization platform is those digits that you generate that are a mirror of your standard card PAN or card digits. And this tokenization platform is used to enable what we call the OEM pay, such as, for example, Google Pay. So we've rolled this out in Japan a few years back with JCB, and obviously delivering this in Japan gave us a tremendous, I would say, a positive feedback in the market, gave us also connection at high level with many banks. And we have seen a market need and appetite also for cards in Japan, physical cards that are provided by only 2 local companies. The Japanese cards have some interesting specificities. Actually, we were speaking about the EMV chip, but the good old Max Stripe that you have on the back of your card. In fact, in Japan, you have 2 on your banking card. You've got a second one that is hidden on the front that is used for the legacy ATM. So we needed to develop this technology to be able to address the Japanese market. And this is something we've done a few months back. We've won a few customers that trusted us, Toyota Finance, to name one, but also Japanese fintechs, Upsider. And there is an appetite for innovation in cards in Japan. Feedback we receive from the market is tremendous. So that's one of my top priorities in the next months.
That's great to hear. You opened a very nice office just about a year ago, which probably has been a bit underutilized, but it has all the technology employed. So people walk in with biometrics recognition, face or fingerprints rather than having an employee card.
We have a set of hardware that are very relevant in this contactless world for access control. One is called the Morpho Wave, so where you basically wave your hands in a device without touching anything, and it's scanning for fingers. And we use this biometrics to access our offices in many countries. I'm using it every day in Singapore as well, when I can go to the office, obviously. And this is something that we've also deployed with tech company in Japan, such as Digital Garage, that is using this for access control for their employees in Shibuya.
You mentioned like the additional magnetic stripe, and in addition to that, also the NFC system is different here, right, than the rest of the world. So we'll make it a bit more difficult to actually launch in this market than anybody else.
It is. Japan is using a lot of proprietary technology indeed, which is making this market really interesting, and also why innovation on the card space is not at the level of what we could expect. And that's our aim, to bring that to the market and address these needs. So there's been NFC, this Max Stripe. There are many, I would say, specificities to the Japanese market. But overall, the market has opened up to international standards more and more across the payment value chain. And we have seen a trend of using more and more standard technologies in Japan. I recall when I was living in Tokyo, I think it was back in 2014 or 15, it was actually quite hard to get cash from an ATM with my euro European card at that time. And now I'm sure you can use your international payment card to get cash in most parts of Japan. So the technologies have upgraded to international standards, making it, I would say, the right time to accelerate our development there.
Yeah, it's interesting. So I don't know if they changed it now for the Olympics, but at the time of the Rugby World Cup, for example, we went to the Shinkansen, the bullet train, and the vending machines were only taking Japanese credit cards still at them. So if you had an international card, you had to go to the counter. They were able to process it, but not at the machine. So maybe that has changed for the Olympics, but now we won't have visitors. So
I think it's probably not yet there everywhere, but clearly it's a trend. EMV POS, you can pay with your EMV card in a lot of places in the big cities, which when I was living in Tokyo was not necessarily the case.
So the other area where Asia seems ahead, and mostly driven out of China, of course, is the hot topic of Central Bank Digital Currencies, or CBDCs. It's another payment method we're only adding, as you iterated earlier, or is it something that is actually a threat to credit card, debit cards?
When I look at what's happening overall, in most of the framework of CBDC, they are trying to find a role for the commercial banks in the CBDC play. I don't imagine, maybe it will happen, but I don't imagine a setup where the central bank of a country will become the bank itself and remove from the equation the commercial bank. So I do believe from the white paper I've read that commercial banks will find a role in this ecosystem. And one of the reasons is that commercial banks are used to onboard customers and deal with them. So everything we were mentioning around EKYC, customer onboarding, and then customer service, this is the bread and butter of financial institution and where they're also good at, which is not the core DNA of a central bank. So I do believe banks will have a role definitely in this ecosystem. The form that this issuance will take for CBDC is still open. We are exploring this topic in IDEMIA. I'm personally passionate about this topic, but typically there's a concept which is offline authentication in most of the requests from central bank. So being digital, being mobile first, and having a wallet for the distribution of the CBDCs is of course a given. But then what happens when you're offline? How do you transact when you're offline? And that's where our secure elements have a role to play. We've done some proof of concept in the past years around putting blockchain technology in our secure elements. So blockchain in a card, blockchain in a SIM card, where basically you store the private key in your secure element, and you use it, and you use the second factor in a way to sign a blockchain transaction. So this type of technology could be reused for CBDC.
So that becomes an interesting discussion from the advocates of blockchain. Not all the proposals that are out are necessarily blockchain based, right? And the CBDC can operate on, but doesn't necessarily need to have a blockchain. So I think the China implementation goes without, and what has come out of Europe recently is also based on the target instant payments. Different models will certainly an interesting space to follow.
In any case, what I'm convinced is that whatever the underlying technology, you still need to store your private key for offline authentication. And this private key that allows to prove that you're yourself could be in any form of secure elements. It could be in your mobile with trusted zone on your smartphone. It could be in your SIM card. It could be in your payment card.
Cool, this is wonderful. Maybe to round it out, a last call for action to the fintech startups. So how they can use your products and how best to approach IDEMIA?
Definitely, I'm always available and easy to find on LinkedIn, so I could be an easy entry point. Otherwise, we have a dedicated website, which is the FinTech Card Accelerator, so they can easily contact us for that. And I was mentioning in the beginning, we have a footprint in every country with a local representative, and they'll be delighted to have discussion on any needs, being it customer onboarding, payment issuance, or even some new solution we're launching that could help them across the compliance journey as well.
Wonderful. Thank you very much for the conversation. It was a pleasure to meet you.
No, thank you. Thank you for having me. It's a pleasure and very interesting discussion. Hopefully we can catch up in person one day when travel will be allowed.
Thank you very much.
Thanks for having me.